Awesome. Hey, you guys, there we are. We are live, I believe, right? Yep. We are live in Exp Family Tree. This is going to be our last motivation market update Monday session until the new year. As we were just discussing, of course, Monday is Christmas Day. So you guys will not be joining us, nor will these amazing ladies. Hey, Chrissy. So today is the last kind of market update. What's going on? How do we need to educate our clients? This is a great time, you guys. I'm sure you agree, to be planting the seeds, even if people are like, oh, I don't want to do something this week or next week. But I mean, pretty soon it's the new year and people are looking at their new goals and what they want the year to look like. And so now's the time to be planting the seed. So what's going on in the market? What do we need to look out for? Why should we be setting appointments with people for the new year? These are the things that you guys should take from these meetings. Go do something with them this week and then be able to go enjoy time with your family, feeling like you planted the seeds necessary to have, you know, the fruits of your labor come in the new year. And I think that's the most important thing. And that's what this is about every Monday, is that you start your week out with a market update, some motivation, some good mindset. You can go do something with what you learned, leave with the information and energy to do so. And if you did it consistently, you would have a great result in your business. And so that's why we're providing this consistent meeting for you guys to join in for 20 minutes. It's not much of your time. So spread the word, tell your friends. And once the new year happens, we'll do a lot more marketing of it as well, so that you guys are all aware of it. So Angie, Nikki, I'm going to let you guys take it away. Thank you for being here every Monday and all that you guys do. And Merry Christmas and Happy New Year to you guys, since I won't see you next week as well.
Thank you. You too. Nikki, as usual, I will let you go ahead.
Do my thing, I guess. Yeah. Well, Merry Christmas and Happy Holidays to everyone. Last week, we got some nice Christmas presents and lowering of interest rates overall. Some great numbers came out from an employment standpoint, from an inflation standpoint. And I was kind of walking you through earlier last week, like what we're kind of heading into and what we're looking for. So what that resulted in, if you can see my little graph here, is that we have interest rates. You can see that this is where a lot of those numbers came out. And it started this big rally to lower interest rates. And as a reminder, the farther up this bar goes on this graph, the lower the interest rates. We've had some good stabilization right here. We had a really good day with the market, fell a little bit, but overall, some really good improvement on interest rates overall. We're waiting this week for one more number from the Fed to come out, which has to do with consumer, how they consumer, I think it's called like consumer product exchange or something of that nature, where basically talks about how people are spending their money. And we expect that number to be lower, which in lowercase is a good news, which means that it hasn't really gotten this far or been this low since March of 2021. The number is, around the 3% mark, which doesn't mean anything necessarily to anyone, but what it does mean from a mortgage interest rate standpoint is that we should see some improvement over next week, as a nice, again, another nice holiday present for us as we move into the new year. So yeah, all things are good. We kind of call this the week between Christmas and New Year's as kind of, a week to regroup, a week to spend time with our families, a week to kind of just consider what we want the new year to look like. And in our family, we definitely set some personal goals and some business goals. So just kind of really taking the time to spend with our families and things like that. It's not to say, though, that the market has actually slowed down or been slow like it has been earlier this year. I've actually increased in loan applications by about 20% from preceding weeks in December. So we've had a lot of activity. A lot of people are understanding that, hey, now is a great time to get pre-approved. Now is a great time to buy. We want to get in before the new year. We want to get pre-approved. We want to start our new year off right. So that's been really nice to see that increase in loan applications and increase in people going, oh gosh, now is the right time for me. So that's all good news from a market standpoint. So from a on the street standpoint and what I've been seeing last week, kind of as I work through different files and as I work through different clients, is I know this is an old talk. I know that we've talked about this probably 100 times, but those pre-approval letters that you get from lenders are so incredibly important to understand what they're trying to communicate to you. So just as a reminder, there's couple different kinds of pre-approval letters that you can get from a lender. Okay. There are some state specific requirements. Like for example, in Arizona, there is a pre-qual form that you have to fill out, and it's only the pre-qual form. It's never called a pre-approval. And it has you fill out specific information on what you've walked the client through, and you have to sign off on it as a lender and say, hey, I have done this. And then the borrower also has to sign their pre-qual letter to say, yes, this is true to the best of my knowledge. So it kind of, that's an Arizona requirement. We don't have that requirement in most other states. So for example, in Minnesota, it is literally a piece of paper that we are handing to any realtor, to any borrower. That's a letter stating on our side what we've done and how we've handled the transaction thus far. A couple things that, key points for realtors as you move into the new year, as things are going to change, as automated underwriting is going to change, loan limits are going to change, and things of that nature. Keep in mind a couple of important questions that you need to be asking your lenders as the listing agent and also as the buyer's agent. First and foremost, contingent versus non-contingent. A lot of, the contingency has to do if they own other real estate. Are they required to sell that real estate before they can purchase the new home? Now, people, a lot of people think that this non-contingent only has to do with the debt to income ratio. In other words, can they afford both mortgages if they were to move into this new house? And that's only one component of the contingency. The other component we have to consider is assets. Do they have a way to either access the equity in their current home, have other means of accessing assets such as stock options, savings accounts, checking accounts, things like that, in order to fulfill the down payment requirement? And have we as the lender had the talk with them about both of those components of a contingency? Now, a lot of people will say, well, contingency only is based on can they afford both mortgage payments? But we can't send them to a closing table without any money. So that's definitely something that you want to consider. So when you do see that non-contingent, say, have you verified with the non-contingency that they can not only afford both payments, but that they have the assets to cover if their home doesn't sell before they purchase this new one? Mm-hmm. I've been asked a couple times throughout the last year and even before then to write a non-contingent pre-approval, and in the idea that since real estate was selling so quickly that other home would sell and it would be a non-issue. I'm not a huge fan of it. And that has to do with, really not talking through the contingency as it's supposed to be. So that's one very important distinction on pre-approval letters, is to look for that contingency and ask the question. The other question that I get very often is on my personal pre-approval letters for the income and the assets, is I list them as verified. A lot of different lenders will list them as documented, but I list them as verified, where verified to me means I've looked at the documents, I've received them, I've ran my calculations, and I've done an automated underwriting approval based on the calculations that I have of the information. Documented could just mean, hey, I happen to have a pay stub and a W-2, but I haven't done much more with that. So keep in mind, if it does say documented, there's nothing wrong with that. It's more like, I choose to use the word verified, but just knowing that, hey, just because they have a pay stub doesn't mean they've done the extra work to calculate income and put together a automated underwriting finding for the approval. Now, that kind of brings me to my third point, which is automated underwriting. Nowhere in any of my pre-approval letters in any state is it ever asked of me whether I have ran the file through an automated underwriting system. We have automated underwriting systems on our site for Fannie Mae, for Freddie Mac, for FHA, for VA, for pretty much any loan that you can think of, except for jumbo and anything that we do that's kind of like weird, like a bank statement program or something of that nature. But most of the time we are running our client's scenario through that automated underwriting system. That automated underwriting system is important because it's going to verify income for us. In other words, it's going to tell us if the pay stubs that they provided match up to the employer provided work information. So we ask the employer to provide income information, and we match those pay stubs up to that to make sure that everything is in line. It's also going to tell us whether or not we need reserves. And reserves are, if somebody's purchasing a home, for example, most of the time it happens on investment properties, we will need to have not only assets for down payment and closing costs, but a certain amount set aside beyond that, maybe 3 months of the mortgage payment or 6 months of the mortgage payment. That amount is determined by the automated underwriting system. So it's important for us to run that automated underwriting system so that we know before we issue pre-approval that the client has enough assets to cover if reserves are required. Most of the time when you have a primary residence purchase, we do not need additional reserves. Sometimes we do based on the credit profile. It just depends on how the automated underwriting system comes out. So that's also important to ask your lender, have you ran the automated underwriting system for the approval? That's an important question to know as well. I get tons of questions on my pre-approvals. I've had to look at other lenders' pre-approvals and explain to the agent, this is what they mean, this is what they're going for. I've had to get on the phone with other agents and explain my pre-approval letters. So it's important to have that knowledge and understand what questions you need to be asking. So for us as a lender, it's also important to know that if you are calling me, there's only certain things that I can tell you about the client who is buying the home without compromising their privacy or their right to privacy. So if you ask me a specific income question, I'm not going to be able to give you an answer. If you ask me, I can say, for example, a really good example of this actually is, let's say a client has a bankruptcy that's 3 years old and they have an FHA pre-approval. I can say to the listing agent, we are going FHA on this. It has to do with a past credit event, but nothing that disqualifies them from qualifying for a mortgage. I cannot say, yeah, they had a bankruptcy in 2019, and therefore we haven't met the requirement yet of, going conventional or whatever that case is. I can just say it's purely due to circumstances that are in the past, and they are, other than that, they would qualify conventionally, or other than that, it's a great candidate for purchasing a home. So a lot of those discussions, just make sure you're aware of what you can ask and what you can't ask. It's just been quite a couple of weeks with pre-approval letters and me explaining and having to explain other lenders' pre-approval letters. So I wanted to just review that and make sure everyone understands that you can ask, please ask the questions, call us. We are here to help. We want to give you confidence in what we can do from a lending standpoint. And we want to have that conversation because we're going to be talking throughout the transaction. So we want to make sure that we start off on the right foot and we understand each other and are on the same page.
Well, and I think that's a great point. And I've just from what my viewpoint as being agent for 10 years now, I feel like the underwriting, that's newer to pre-approval letters in the last couple of years. So I would love like a little bit more maybe explanation for the people watching the replay or on the call of why that came about and what truly that means. Because to me, I know it's better. I know it's a little bit further along, and there's almost like the only thing we're waiting for is appraisal. And in the olden, pre this crazy market we had, you were just getting letters, and it was just like you kind of said, just the letter kind of saying documented, not verified. A little bit more on the difference, and I guess what that means to a listing agent if they had two of a similar offer, and you had one verified and one documented. I'd love a little bit more on that.
Yeah, I think the verified and documented is mostly a choice of words. However, it's important to ask that if it is documented, that's also verified, that you've looked through the information, you understand, like, let's say they have $100,000 in their bank account. Did you look through that bank statement to make sure they didn't have a large deposit of $70,000 that we had no idea where it came from? Things of that nature. Where we've done the upfront work to make sure that that information is verified so that when we do go in to under official underwriting, once they have a property address assigned, the underwriter is able to look at the automated underwriting approval, the documents that we've already provided, put those pieces together, and maybe just need a couple extra questions answered. That's the goal. The goal isn't to, bring up any red flags. The goal is not for the underwriter to find a way to deny the file. That is not what's happening. Trust me, if there's an automated underwriting approval and we've done what we can on the document side, most of the time the underwriter is going to be like, sweet, thank you so much. Here's your approval. Let's get out the door. Let's do it that way. There's a certain, that automated underwriting approval, it bases itself on input from the loan officer or from the person dealing with the loan application. So in other words, if you have a client that enters that they make $6,000, you get a pay stub and it may make $5,500. you run your automated approval up based on the 5,500, not the 6,000. Not that that's not obvious, but we've seen the income, we verified it, we put it through the automated underwriting system, and we made sure that that income is going to work on a long-term basis. So it's really just in those details. It's important that that automated underwriting is, the input is correct. That's why I say that verified. So we're looking at all that information, making sure we input that information correctly, because it is automated. And as things, as time goes on, as technology increases, and as this system gets smarter, it is going to take other, things into consideration. However, it does balance income, assets, credit score, and things of that nature. Excuse me.
Yep. And I think that's perfect. And I think the more we can ask questions, the more we can come from a place of knowing and being knowledgeable, at least what questions to ask. I think it's so important. I know that early on in my career, when I was just learning everything, it was just, okay, I got the letter and I didn't really know necessarily what that meant. I mean, I did, it's a pre-approval, but what steps or what was, documented or verified or underwriting. I think there's just so many more terms that agents should be aware of if they aren't, and what it means, and ask the right questions and know what questions to ask. So that's so important. I love that.
Yeah. And a lot of times we can, with that automated underwriting system, we can actually get an income verification right inside it, where we never even have to gather a pay stub from a client. However, we tend to back that up with a pay stub just in case, things of that nature, because we don't want things to, surprises come into surprises later. And that's important, as well as to eliminating the surprises during the pre-approval, so that as they're searching for properties, we don't have surprises along the way.
Well, and I think, like you had alluded to earlier, is yes, no surprises. You've done your due diligence more upfront, and not to try to break anything, but also the underwriter really appreciates that, because then a lot of it's already done, and no one wants a surprise. So it's like, why not do more upfront? And I think that some people steer away from that. And I from a high level understand why, but if you get into the meat and potatoes of it and just into it, it's not a good idea to not do that. So,
Exactly. And so it's just, like I said, just tips and tricks as we go into the new year. The automated underwriting system is becoming more robust. We talked a little bit about during 2021 and 2020 and the increase in number of property inspection waivers or appraisal waivers that were coming into the market. That's all based on the algorithm of lending that Fannie and Freddie have done over the past however many years. They've been tracking all that data, and all that data makes that system more robust and allowing us to use a property inspection waiver or not use a property inspection waiver, depending on down payment and credit score and algorithm. So that's one way that it's gotten smarter over the years. The income verification is another huge change. And then also we have a way to basically verify online people's assets, specifically from their bank, and put that into that automated underwriting system as well, so it can track different options there that we need to be aware of, large deposits, things of that nature that we're going to need to document. And so for us, there's a certain couple stages. The one is the initial pre-approval stage. And then once we get that purchase agreement in and it goes to the underwriter, then it's another set of questions, which are usually minimal, because we've done a lot of that work up front.
Yep. I love it. Preparing us for 2024. It's absolutely and wonderful. And I wanted to touch base too. So for like a mindset, you even brought it up, goals. So how are you going to go into this next week and a half, 2 weeks? I say definitely be present with family. If you've done what you should have done and done goal planning and a business plan, you're on track, and you've built this time in to this time of year. So, and if you haven't, then make that a goal for next year in 2024, so that you're not falling short or wondering, I have to continue work because I need to go in strong to next year. So all that should be set up with a great business plan, which if you need help with, reach out to me. I'm happy to do so. But I wanted to share, as you're thinking about this, a lot of agents and a lot of my elite clients talk about, what you need to do. And I talk a lot about goal setting and coming from your goal and waking up and getting your to-do list and your 3 to 5 things that are going to move your business forward. And I, just because I'm so much about perspective and perception, I challenge you, if that's not working, and if it's becoming just this broken record in your mind, because that's always what we hear and what people talk about, I challenge you to think about, what do you need to let go of? Or who do you not need to show up as? Or who do I, what bad habits do I want to drop? So even just taking that as you're going into goal setting, going into 2024, a lot of people will do like a New Year's resolution type thing. Instead of thinking about all the things that you want to do or on your to-do list or that you're going to accomplish, switch the framework and think about, okay, with that in mind, who do you not need to show up as anymore? Or what can you stop doing? Or what do you need to stop doing? Or what disciplines would you want to build? And what habits and what part of you do you need to let go of? Because if your goal is worthy enough of you and an exceptional goal, you will not get there from who you are today. So it's all about getting comfortable, being uncomfortable, and growing through that. So knowing that, who do you have to stop becoming? I love it. So it's a different way. And I know a lot of people are focusing on that and goals and setting them. So if you're one of those, like I was for many years, you kept setting the goals and missing them and not doing this, it's a process and it can be done. It's just reframing and getting a different perspective on how you're asking the questions, because we are our only problem and our only solution. We have all the answers. So
Absolutely.
good. Well, we did it again. We got it done within 20 minutes. I love it. As Carrie had said earlier, happy holidays to everyone on the call, however you celebrate. I don't know if we're going to do one on the 1st or not, or if we are be back on the 8th. Do you have an idea, Nikki?
Day sounds good to me. I don't know.
Perfect. Yeah, so we'll be off the next couple of weeks and we'll be back on the 8th of January. We'll get some information out beforehand. But again, happy holidays, happy new year, and we'll see you soon.
Bye, everyone.
Take care.